So it's another great time we meet for these continued sessions of advanced financial reporting and analysis. So for the session of today, we are going to do external reconstruction. So we did internal reconstruction, 2 questions, and I gave 1 as an assignment. So you have the answer to that. I think you have the marking scheme to that question I gave as an assignment. But if you have any challenging maybe question based on that question I gave as an assignment last time, I think you can ask at the personal level. So for today, I am going to tackle external reconstruction. So that is the area of today. And this is the last part for reconstruction. So that next we do earnings per share. So external reconstruction. So I said when we talk about external reconstruction, it's all about a new company being formed to take over the operations of the old company. A new company is being formed to take over the operations of the old entity. So we have various procedures which are followed when we are doing external reconstruction. So the first thing which must be determined, so if it was, let's say, R remittent, which was on financial distress, So another company, let's say M remittent, you will be told that it was formed to take over the operations of R remittent. So meaning that M remittent will have to compensate the providers of capital in R remittent. So the providers of capital here, will have to be compensated by this company. So last time I said that the providers of capital in a company are ordinary shareholders. We have the preference shareholders, and we have the loan providers. So the providers of capital. So these are the ones who will be compensated by M remittent. So meaning the first thing we have to do is what? To determine purchase consideration. How the providers of capital in the old company were compensated. Then the next thing now, you need to close some books. Close books of the old company. So some books of the old company would have to be closed. So which are some of these books to be closed in the old company? So some of the books to be closed in the old company is all about the ordinary sundry members account. We have the preference. Sundry members account. We have the debentures account. And we have the realization account. So those are some of the major books to be closed in the old company, of which I have to prepare again, even if they are not major to be closed. So the one which are major to be closed here are those 4. Those are the one even you can be asked in an exam to prepare to close the old company. So the additional, which depends on this account so that they are complete, we have to do purchasers account. We have to do the purchasers account, and we have to do the cash book account. So step number 1, determine purchase consideration. Step 2, close books of the old company, the one mentioned there. Step 3 now, you do the journal entries of the new company. Then finally, you prepare the relevant statements, prepare statement of financial position based on a reconstructed entity. prepare the statement of financial position of the new company. So those are the relevant steps to be followed. Those are the relevant steps to be followed. So meaning that the external reconstruction and the internal reconstruction are different. So they seem to be different. They don't have to be the same. Because for internal reconstruction, I said, the entity doesn't lose its legal identity. You remember the way we did internal reconstruction. But now under external, a new company is formed to take over the operations of the old company. So how can you differentiate internal and external? How can you differentiate internal and external reconstruction? So under internal reconstruction, the first thing we have said that under internal reconstruction, the entity retains its legal identity. Under external, it doesn't retain its legal identity. So the legal identity of the old company is transferred to that of the new company. So the old company loses its legal identity. So another difference you can talk about under internal reconstruction, it involves a process of capital reduction. It involves a process of capital reduction. But under external, it involves realization of assets. It involves the realization of assets. Number 3, another difference. Under internal, remember we said, who is appointed to carry out the work of internal reconstruction is called a receiver. So under internal reconstruction, a receiver is appointed to do the work of internal reconstruction. But under external reconstruction, they appoint someone called a liquidator who does the realization of the assets. Who does the realization of the assets. So we have talked about legal identity. We have talked about the aspect.
Pardon about internal. Pardon
Sorry?
about internal. A receiver is appointed and.
So under internal, a receiver is appointed, and external, they appoint a liquidator who does the work of realization of assets. That is under external. Under internal, a receiver is the one who does the work of a capital reduction of the entity. So those are the 3 differences I can mention. But you have them in your notes. I'm just explaining what you have. So you go to your notes, check under reconstruction. So there's those differences. So the main thing you need to understand is this. Step 1, step 2, determine purchase consideration, the books to be closed, journal entries, how they are prepared, and the statement of financial position. So now for us to address this aspect of understanding external reconstruction, we do that question of May 2016, question 3. The one I shared to your WhatsApp group. So you can download. At the same time, I will display from my end so that you will be able to understand what is required when we do this work of external reconstruction. So they were saying that Asar Limited, which has been operating in the telecommunication sector, has been posting successive trading losses. The directors of the company have made a proposal to reconstruct the company by transferring the entire operations of the company to a new entity to be called Sawadi Limited, with effect from 1st April 2016. The full statement of financial position relates to Asara Limited as at 31st March 2016. So we have Asara Limited statement of financial position. So we go to the additional information. So because statement of financial position, you know what it pertains: assets, equity, and liabilities. So we don't have to start reading one item by one. We don't have to do that. Additional information is our area of concern. Sawadi Limited issued 3 new ordinary shares of shillings 10 each for every 7% cumulative preference shares in Asara. In addition, the 7% cumulative preference shareholders in Asara were issued with 2 new 10% preference shares of shillings 10 per value in Sawadi for every 7% cumulative preference shares held. So on this scenario, in this case, you need to understand that there was a new company which was formed to take over which operations. So here we have Asara. At the start of the question, they said that there was Asara, which has been posting successive trading losses. So the directors of the company have made a proposal to reconstruct the company by transferring the entire operations of the company to a new entity to be called Sawadi. So Sawadi is the new company. So the Sawadi is the one which will be compensating Asara. Additional information. Now, you will be seeing Sawadi compensating the providers of capital in Asara. Like now here, when Sawadi was compensating the preference shareholders in Asara, he gave them 3 new ordinary shares of shillings 10 for every 7% preference shares. In addition, again, the 7% cumulative preference shareholders in Asara were issued with 2 new 10% preference shares of shillings 10 per value in Sawadi Limited for every 7% cumulative preference shares held. Number 2, the preference dividends in Asara were 3 years in arrears. 3 years in arrears. So we need to determine which are these preference dividends which were in arrears. So once we know which are the dividends which were in arrears, then we check these preference shareholders accepted to be compensated in which manner. So the 7% cumulative preference shareholders in Asara will accept 3 fully paid ordinary shares of shillings 10 each. So they will accept 3 fully paid ordinary shares of shillings 10 each in Sawadi, and shillings 20 of the 8% debentures in Sawadi for every 100 of the preference dividends in arrears. Number 3, the existing 10% debenture holders in Asara were issued with 5 fully paid ordinary shares of shillings 10 each in Sawadi and shillings 40 of the 8% debenture for every 100 of the 10% debentures. Like now, the 3, we have a 10% debenture holders in Asara who were issued with ordinary shares of shillings 10 each, and they were given a debenture of shillings 40. This is and shillings 40 of the 8% debenture. This is one debenture going at 40 for every 100 of the 10% debentures. Number 4, the ordinary shareholders in Asara were issued with 2 new ordinary shares of shillings 10 each in Sawadi for every 5 ordinary shares held. So you can see there it's ordinary shareholders who are being compensated by being provided with ordinary shares. The current liabilities of Asara were taken over. That is number 5. The current liabilities of Asara Limited were taken over by Sawadi at a book value. Number 6, the assets of Asara Limited were taken over by Sawadi at their fair values as follows. So that is how they were taken over at their fair values as given there in note 6. You can see PPE, available for sale, financial assets, inventories, accounts receivables, financial assets at fair value through profit and loss. Number 7, the liquidation expenses of Asara amounted to 30,000 and were paid by Sawadi. So what you need to know is that the liquidation expense is supposed to be paid by the company which is liquidated itself, not the new company. So if the new company pays for the liquidation cost, if the new company pays the liquidation cost of the old entity, that amount is supposed to be included as part of purchase consideration. Like now here, Sawadi is the one who paid on behalf of Asara. So this amount will be included as part of the purchase consideration. Number 8, all of the above transactions were completed on 1st April 2016. So what the examiner need is a ledger accounts to close the books of Asara. So the ledger accounts to close the books of Asara. Journal entries to record the relevant transactions in the books of Sawadi. Statement of financial position of Sawadi as at 1st April 2016. That is 20 marks. So let's present this. So I think you have your hard copy, because I will be expecting that you give me the relevant figures from your side. So May 2016, question 3. So, and I think everything is okay from my end. So May 2016, question 3. We are doing a question of external reconstruction. So the first thing I said we do, step 1 is all about you determine purchase consideration. So even if the examiner needs the ledger to close the books of the, that is what they need. The first requirement was the relevant ledgers. So you cannot do the ledgers before you do this. So the first thing you always do is the determination of purchase consideration. So purchase consideration. So here, it's based on how Sawadi was compensating the providers of capital in Asara. Number 1, you are told Sawadi issued 3 new ordinary shares of shillings 10 for every 5-7% cumulative preference shares in Asara. So meaning that preference shareholders, so to preference shareholders, in Asara. So to preference shareholders in Asara. So the preference shareholders in Asara are the one who are compensated in that note 1. So they were provided with what? Sawadi gave them ordinary shares in a certain proportion. So 3 ordinary, you can even interpret. He gave them 3 ordinary shares for every 5 preference shares held. So you go to the statement of financial position, you check how many preference shares were held. Remember that this is the number. The proportion is in terms of number of ordinary shares. So what is the number of preference shares? So if you go to the statement of financial position, you can see preference share capital, a value of 4,000. Per value is 10. So if you divide, you get how many shares? 400 preference shares. So if you equate that, you determine how many ordinary shares they were provided with. So to preference shareholders, they were given ordinary shares. Ordinary shares. So in which proportion? So in which proportion? You say 400 times 3 divided by 5. So that is how you get the number of ordinary shares they were provided with. But these ordinary shares, they said they were at what amount each? Sawadi Limited issued 3 new ordinary shares of shillings 10 each. Of shillings 10 each. Continuation, that note 1. They said, in addition So in that note 1, continuation, they said, in addition, so there's a sentence there, the second sentence in note 1. In addition, the 7% cumulative preference share, the 7% cumulative preference shareholders in Asara were issued with 2 new 10% preference shares of shillings 10 per value in Sawad Limited for every 7% cumulative preference shares held. So who is being compensated there in that sentence? Who is being compensated? Which provider of capital is compensated there? The 7% cumulative preference shareholders in Asara were issued. So it's preference, the same providers of capital, the preference shareholders. They were given what? 2 new. They were given 2 new 10% preference shares of shillings 10. So 2 new preference, 10% preference. For every what? They said for every 7% cumulative preference. So for every 5 preference. So how many preference shares do we have? The number is 400. So you determine the preference shareholders. So you determine the preference shares, sorry. So you determine the number of preference shares they were given. So they were provided with 10% preference shares. In which proportion? You say 400 times 2. You divide by 5. So these preference shares they are given, you are supposed to multiply with their value in shillings. So they said 10% preference shares of shillings, 10. So you multiply 10. I think you are understanding what we are doing. You are seeing what I'm doing. So additional information number 2. Additional information number 2. Just a minute. So before even we continue, what are you getting here for the ordinary shares, the value, and for the preference, the value? 400 times 3 divided by 5 times 10.
160.
160. 20? It cannot be 160.
The first one.
2400.
Yeah, 2400.
The second one?
1600.
1600. All right. So we go to additional information number 2. The preference dividends in Asara were 3 years in arrears. So we need first to determine the dividends which were in arrears. So based on the contractual rate. Based on their contractual rate. So contractual rate, I mean, if you check in that statement of financial position under equity, the preference share capital is stated at what? It's a 7%. They say 7%. So this is the contractual rate times the value of that preference share capital, which was 4,000. Times how many years? So they said these dividends were in arrears for how many years? 3 years. So 3 years. What do you have? So this is what they will compensate based on the information which will be given.
$840.
840, yeah? So this one was compensated by preference shareholders accepting what? In that additional information, they said the 7% cumulative preference shareholders in Asara will accept. Now that one you need to be a bit careful because they are compensating in 2 ways. So the first way they said will accept 3 ordinary of shillings 10. So each owing at 10. So meaning that this one each was owing at shillings 10. The same way we have been multiplying here 10, 10. So this one, the ordinary was owing at 10. And what? A shillings 20, 8% debenture. Shillings 28% debenture. So shillings 20. So that is one debenture. Owing at shillings 20. A shillings 20, 8% debenture. So remember that we have to equate both with the preference dividends in arrears. That is why they continued saying, for every 100 of the preference dividends in arrears, for every 100 of the preference dividends in arrears. So what about, remember that they were compensating this 840. What about 840 of the preference dividends in arrears and 840? So that is how you determine that. So you will come here and say to preference shareholders. In Asara. To preference shareholders in Asara. They were given what? Ordinary shares. So in which proportion as told there, as interpreted there? So you say 3 times 840. You divide what? 100. So this one was at shillings 10 each. Then again, you talk about 8% debenture. So 8% debenture, 840 times 1 over 100. Times shillings what? Each was owing at 20. So what's the figure for the first one? So 3 times 840. That is?
252.
So this is 252. The second one is?
$168.
168. Additional information number 3. Yes, you are excused.
Could you please repeat that concept, yes?
Remember that they were
The
saying
whole concept.
they said the 7% cumulative preference shareholders in Asara will accept 3 fully paid ordinary shares. 3 fully paid. It's all about 3 fully paid. Yes, 3 fully paid ordinary shares of shillings 10 each. So when we will be compensating these preference dividends in arrears, the preference shareholders accepted what? They accepted ordinary shares. In which proportion? 3 for every the 100 given there in that additional information. So they will accept 3 ordinary. The 3 ordinary, each ordinary is weighing at 10 for every 100 of the preference shares. Then they continued saying, and shillings 20 of debentures. So meaning that is one debenture. That is one debenture. It's only that they never said 8% debenture. It's only that they said and shillings 20 debenture, 8% debenture. That is one debenture. Each that is at 20. For every same 100 given there. So what about this 840? And what about 840? So that is the only tricky part in this question, by the way, when they talk about compensation in two different ways, and they are not that open. I think you have understood now, or I repeat again?
Yes, I have. Thank you.
Oh, yeah. So we go to additional information number 3. The existing 10% debenture holders in Asara were issued with 5 fully paid ordinary shares of 10 each in Sawadi. And so even that one is just the same as what we have done. Because now in that note 3, it's all about 10% debenture holders who are being compensated. So to debenture holders in Asara. To debenture holders in Asara. So they were provided with what? So they were provided with, so they have said, they were issued with 5 fully paid ordinary shares. So 5 ordinary shares. So each at what? Shillings 10. So we have to equate with the debentures given, the proportion of the debentures provided, of which I can see at the last part of that note 3, it's 100 of the debenture. But before I talk about it, let us continue. So they said, let me repeat again, the existing 10% debenture holders in Asara were issued with 5 fully paid ordinary shares of shillings 10 each. That is what I've written there in Sawadi. And shillings 40 of the 8% debenture. So shillings 40 of the 8% debenture. So that is one debenture going at shillings what? 40. For every word of the debentures, that is what they said at the last part of that sentence. For every 100 of the 10% debenture. So for every 100 of the debenture and for every 100 here. So you go to the statement of financial position, you check. So remember that this is in shillings, because our proportions must be the same as what is provided. So you can see in the statement of financial position, the 10% debenture is stated at what? Shillings 4,000 of the debenture. Here we talk about shillings 4,000 of the debenture. So you will come here and say they were provided with ordinary shares. So 4,000 times 5 over 100. So these are, we have determined the ordinary shares they were being given. So each ordinary was going at 10. So times shillings 10. Then here again, they were compensated by being given 8% debenture. 8% debentures. So 4,000 times 1 over 100 times shillings what? So each debenture was at 40. So what do you have for the ordinary shares from your side?
2,000.
That is?
2,000.
So this is 2,000. What about 8% debentures? So this one goes with this.
1,600.
1,600. The next additional information number 4, the ordinary shareholders in Asara were issued with 2 new ordinary shares of 10 each in Sawadi for every 5 ordinary shares held. So who is being compensated? The ordinary shareholders in Asara. So to ordinary shareholders. in Asara. So to ordinary shareholders in Asara. They were provided with what? Ordinary shares. In some cases, like now, once you understand how these things are done, it's not a must to interpret all of those informations. Like now, this one is a bit direct because you say it's 2 new for every 5 held. So 2 for every 5. How many ordinary shares are held? The number of ordinary shares from the statement of financial position. You go to the statement. So you go to the statement of financial position. Try to maintain your mic. Mwenye anasoma na mtoto, maintain your mic. So mute. So ordinary shares. So it's 2. So anyway, 2 ordinary for every 5 held. For every 5 ordinary shares held. So how many shares are in the statement of financial position? So it was the ordinary share capital is 6,000 divided by 10. So you have 600 ordinary. So what about that? So it's same as saying 2 over 5 times 600 times what? Times. So each ordinary shares was owing at what value? So the ordinary shares in Asara were issued with 2 new ordinary shares of shillings 10. So 2 over 5 times 600 times 10.
2,400.
So that is 2,400. Then finally, I said that if the new company is the one which pays for your liquidation cost, that amount is supposed to be included here. So the liquidation cost, which was paid by Sawadi, according to note 7, because note 5 and note 6, that one doesn't affect purchase consideration because it's all about current liabilities being taken over at their book value. That is note 5. Note 6, they are saying how the assets were taken over. The note 7 is where they mention about the liquidation cost. So at 30. So remember that this one is in terms of thousands. It's in terms of thousands or million, it's thousands. So the total purchase consideration will be, if you add these figures, 2,400 plus 1,600 plus 252 plus 168 plus 3,600 plus 2,400 plus 30. So I'm getting 10 for 50. $10 for 50. And once I'm done with this, the other work is just now understanding how this will assist you to do the other accounts. So the first relevant ledger to open is all about the purchasers account. That is Sawadi account. So to recognize this 10 for 50. So you debit purchase consideration 10 for 50. You credit how they arrived at this. So they arrived at 10 for 50 by giving preference shareholders, ordinary shares, 10% preference shares. Preference shareholders were given ordinary shares and 8% debentures. Debenture holders were provided with ordinary shares, 8% debentures. Ordinary shareholders were given 8%, that is ordinary shares, and we have liquidation cost. So that is credited. So if it's ordinary share capital, we just cumulate them. So do cumulative. So of 2400 plus 252 plus, we have another ordinary here, 2000 plus what? 2400. What do you have? 2400 plus 252 plus 2000 plus 2400.
$70.52.
So that is 70.52. Then there is this 10% preference. So is there another preference? I can see this one. There is no another preference. So 16. Then here we have 8% debentures here and here. So 168 plus 1600. So 8% debenture. So that is 1768. Then finally, we talk about liquidation. It would affect cash book because it's money which were given as liquidation costs to the old company. So it was 30. That is how they arrived at 10,450. And here we have 10,450. So since this company is being liquidated as Sarah, so this amount we have to close it to realization. So when I will be opening realization account.
Teacher, is that a working, am I part of the?
No, I'm
Question.
not answering what is required. Number one.
Okay,
This is the relevant ratios I'm doing.
okay.
So this was working. This was a working.
Okay.
So another ratio account to open, it's all about ordinary sundry members account. It's called sundry because it's opened once. It's not an occasion. It's not an account which will be done from time to time. It's an account which is opened so that we close these Asara ones. So that is why it's called a sundry members account. So here again, you need to understand what is supposed to be done. So you start with balance brought down. Balance brought down of which amount of the ordinary share capital from the statement of financial position. Their value was stated at what? It was 6,000. From the ordinary share capital, the ordinary share capital is stated at 6,000. 6,000. So what am I supposed to credit here? You need to understand well, because I have avoided a lot of information which is irrelevant. The first thing some tutors could tell you is that debit this, credit this, debit this, credit this, a lot of information. So which most of the students I know, why you get to read all those notes and you can understand how this is applicable in every question, because the way I'm doing this is the way you can do any other question of external reconstruction. So that aspect of a lot of notes being told debit this, credit here, debit this, avoid that. So it's better you understand now. So this account, what is supposed to be done? I have said you start with balance brought down on the credit side. What are you supposed to add here? If there's any reserve and the share premium. Reserve, but not a revenue reserve. Because a revenue reserve is an accumulated losses. And that one will have to be debited. So another reserves and share premium, you credit in this account. So you go to your equity part of that question under the statement of financial position. I can see there's a revaluation reserve. So the revaluation reserve is stated at what? 400.8. So if there was share premium, again, you record here. If there's the aspect of share premium. So reserves and share premium. So meaning that this is what the ordinary shareholders are claiming. The ordinary shareholders in Asara are claiming this. So they received what from? What did they receive from who? From Sawadi. So from Sawadi, now go and check where the ordinary shareholders are compensated. Remember that these are the two preference shareholders, these are the two preference, these are the two debentures. Here is where we have to ordinary. They were provided with ordinary shares. That is according to note 4. They were provided with ordinary shares. So you talk about ordinary share capital. So that is 2,400. Other than this, what is supposed to be here? Assets not taken over. The assets which were not taken over. So how do you know the assets which were not taken over? You compare the one which were taken over in note 6. So the one which are appearing in note 6 and they are not there. So the one which are, sorry, the one, you remember that there's a statement of financial position, and there's note 6. So we have the assets stated in the statement of financial position, that is both non-current and current, or from PPE available for sale, financial assets, goodwill, preliminary expense, inventories, account receivables, financial assets at fair value through profit and loss. So those are the assets in the statement of financial position as per Asara Limited. So out of the one I've mentioned, which is the asset which is not included in note 6? Because note 6, they mentioned and said the assets of Asara were taken over by Sawadi at their fair value as follows. So which one are not here in note 6, but they are appearing in the statement of financial position? Which one? I can see goodwill and what? Goodwill and
preliminary expenses.
Preliminary expenses. Mkona question kweli? Mkona hii question?
Yes.
So it's 7
The
point.
ordinary, sorry,
So those are the two,
the ordinary,
including accumulated losses. So after talking about assets not taken over, now you talk about accumulated losses.
Excuse me.
Yes.
Why are we including assets in the ordinary members account?
So in the ordinary members account, because now to close, remember that what we are trying to do, in short, it's like now that is a very funny question anyway. It's like now you could have asked me, why am I debiting this here? Anyway, what you need to know is this. What I'm doing, I'm trying to close the old company. And to close the books of the old company, remember that we have the assets, yes, which were taken over by the new company, and we have some which were not taken over by the new company. So the one which were not taken over by the new company, to close them off, what we are supposed to do is all about, they have to appear on the debit side of the ordinary share, on the debit side of the ordinary sundry members account. So it's just a double entry which is supposed to be done when closing them off. that is the assets which were not taken over by the new company. So I think that one can well answer your question. So I've said what's supposed to appear here is all about balance brought down, or the reserves other than revenue reserve and the share premium. Then to compensate this, they received this from Sawadi. We went to the purchase consideration working. Then you include assets not taken over based on the information given and accumulated losses. So the accumulated losses are the revenue reserve, the negative in the equity part, that is the accumulated loss. This company has not, Asar Limited has not been maintaining profits. That is why we are doing reconstruction. So it's 38, 22 point what? 22.7, 38, 22.7. So the balancing figure in this account now, we close it to the realization account. A realization account is the one which will close all the balances from these reg accounts. So which is the balancing figure? It's on which side? So what's the total value for the debit side?
$64.30.5.
So 64.30, meaning that this is 64.30.5. So 64.30.5. So the balancing figure will be so minus 6400.8. So this is 29.7 to realization account.
Excuse me. Excuse me.
Yes.
I have a clarification.
Mm.
From Zawadi, the ordinary share capital, tunachukua hii to ordinary shareholders in Hasara,
Yes,
the 2400.
this one.
Okay, thanks.
So the debentures account, that is the next provider of capital to be compensated. So the balance brought down, their balances from the statement of financial position is, so they were claiming to be given 4,000. They received what from, before I do this, and anyway, let's do this, because I was supposed to do preference. Anyway, we can do preference later. So they received what? From Sawadi. You check, to debentures is here. So they were given ordinary. So the ordinary share capital account would be at 2,000. So the ordinary shares, they were given this. And what? 8% debentures of 1,600. So meaning that the balancing figure goes to realization. That is 400. So that it balances at 4,000 and at 4,000. So the next one is all about that preference. Preference. Sundry members account. So the balance brought down here is from the preference. Share capital, 7% preference share capital, 4,000. So plus the one which were in arrears, preference dividends in arrears. You remember we did this one in the additional information, it was 840. That is according to additional information number 2. The preference dividends in Asara were 3 years in arrears. So 7% of 400 times 3. So since this one was paid, so anyway, the preference dividends in arrears, they have to be closed to realization account. So preference dividends, that is preference and members account. They received what from Sawadi. You check, they were compensated by being provided with ordinary. Preference, 10% preference, 8% debentures, because they said to preference shareholders in Asara, to preference shareholders in Asara. So you talk about ordinary share capital, 2,400. So this one I can add the 2 instead of recording one by one. So 24 plus 252. So that is 2652. Then we have 8% preference share capital, 1,600. And 8%, so it was 10%, not 8. 10% preference and 8% debenture, 168. So again, the balancing figure, you close it to where? To realization. So this is 4840. And here we have 4840. So 2652 plus 1,600 plus 168. So 4840 minus answer. So this is 420. That is 420. So the next account to be done, because now what we have done even is enough for the ledger entries if it was for an exam purpose, because we have done purchasers account, ordinary sundry members account, preference sundry members account, debentures account. So to finish these accounts anyway, and for the working purposes, we have to do cash book account. I think we are done with those accounts, so I can clear this side. So the cash book account, do we have the balance brought down from the statement of financial position for cash or bank balance? Under current assets, I don't have any cash. I will say balance brought down dash. So I would only record the one they received from Sawani, the one Asara received from Sawani, the 30, which was supposed to be a liquidation cost. So this is the one to cross to realization. The 30. And now finally, there was an account which I was forgetting, and this is major, by the way. So beside the one I mentioned earlier, this one is another one, realization account. So this is the one which closes now the balances, all the balances from the ledger we have been preparing. and it has to balance automatic. This one must balance automatic because your company is closed. Asara is now being closed. So this is the final ledger to be done. So you have to start with assets and liabilities. So if you were to close an asset account, the individual asset account is credited with debit realization. So individual asset account is credited with debit realization. So the assets which were taken over, that is according to note 6. So we have PPE available for sale, financial assets. We have inventories. So these are according to note 6. Note 6 is the one which is guiding us, which assets were taken over to be closed. And we have financial assets at fair value. At fair value. So these are the assets which are in note 6, but I don't have to record with those figures in note 6. I have to close them the way they are appearing in the statement of financial position, the way they are stated in the statement of financial position of Asara, the way they are stated in Asara. So PP is stated at what? Property, plant, and equipment is stated at 10, 957.4. This one is 647. Inventory is stated at what value? 872.5. Then this one is 689. Point what? 0.9 to 16.4. Then for the liabilities to close them, individual liabilities account is debited. Then we credit the realization account. So they mentioned in note 5, the current liabilities were taken over by Sawadi at book value. So meaning that we have bank overdraft, current liabilities, bank overdraft, bank OD overdraft, 775.8. Another one is payables. Payable to what? 1962. And we have current income tax. Current income tax at 275.1. So after you're done with that, add these assets and liabilities. Now go to your ledger. The first one was purchasers account. I said the purchase consideration must be closed here. So it was on the debit side, we credit. So purchase consideration. It was 10 for 50. The next account was ordinary sundry members account. The balancing figure, I remember it was on the credit side. So we debit ordinary sundry members account. And it was 29.7. The third account we did is this one. To realization on the debit side, so we credit this account. Then for preference sundry members account, there is 2 items to be closed here. The preference dividends in arrears, which is on the credit side, we debit. That is 840. And this balancing figure, preference sundry members account. That is 420. So do your math, check if it's balancing. So for this account, there is this cash book, which was on the credit side, you debit. So it's balancing at 1422.9. So the next thing to do is all about the channel entries of Sawadi, the new company. We have to do the channel entries of Sawadi. So channel entries of Sawadi Limited. So remember that the channel entries, it has a debit and a credit. So debit, credit. So for every debit you do, it must have a relevant credit. Then you give a narration of what you have done. So the first thing you do, remember that Sawadi is the one who paid the purchase consideration of 10 for 50. You remember 10 for 50? So you recognize that. And when doing this, there's a major account to record that purchase consideration, which is, remember that Sawadi was buying Asara because he was compensating them. So we have to debit business purchase. Business purchase account would be debited to recognize that amount he paid when he was purchasing Asara. Then we credit Asara Limited 10 for 50. So you narrate and say to recognize purchase consideration. Then now the next thing is not about you show how this 10 for 50 was settled. So you debit Asara Limited 10 for 50.
Sorry, Mwalimu, naomba kindly.
Yes.
Hello, Mwalimu.
Yes.
Would you mind repeating from the start?
So the first thing you do is
Kindly.
from here.
Yes, yes.
Sawadi is purchasing, he purchased the Asara. So he was paying Asara 10 for 50. So we have to recognize that 10 for 50 paid. So to recognize that, the account which is debited is the business purchase account. You credit the Asara. Then now, the next thing is not about to show how you compensated that 10 for 50. So you debit Asara, the 10 for 50. You credit how we arrived at this. So how did he compensate this? He gave out what and what? If you go to your first account, the purchase account, on the credit side, there was, on the credit side of the purchase account,
Ordinary share capital,
so ordinary share capital at what value?
7052.
We have 7052. Next,
Preference share capital,
preference share capital,
1600.
another one.
Debentures,
Mm-hmm.
1768.
And cash book
Cash box,
of third. So you say on settlement of purchase consideration. So after this, you go to assets. You go to the assets. So there was assets which were taken over according to note 6. So remember that here we closed them at their book value. But now what we are supposed to do is to recognize now the way they were taken over by Sawadi, based on the figures given in note 6. So in that note 6, we have 94, 86.8, 810, 608.7. Receivable is at 477.1. We have 216.4. So the total of these assets, the way they were taken over, you credit the business purchase account. So add 94, 86.8 plus 810 plus 608.7 plus 477.1 plus 216.4. We're getting 11,599. To recognize assets taken over. By Sawadi. Or you say from Asara. Next, you talk about liabilities. So next, you talk about liabilities. So they said in note what? Note 5, that liabilities were taken over, current liabilities were taken over at book value. So liabilities you credit, you debit business purchase account. So business purchase account is debited. You credit those liabilities. Bank overdraft, payables, and the current. It was current what? Current income tax. So bank overdraft is 775.8, 1962, 275.1. So if you add the three, what do you have? 775.8 plus 1962 plus 275.1. So I'm getting 3012.9. So to recognize liabilities taken over from Asara. The next thing you come and check is for goodwill. When we will be doing group accounting, I will be saying goodwill is equals to what? Purchase consideration you minus net assets. On this question, net asset is assets minus liabilities. So you can be checking for goodwill or capital reserve. It can either be a goodwill or a capital reserve. That is what I'm computing here. Either. So purchase consideration is what? 10 for 50. So for net assets is assets minus liabilities. The total assets here is 11,599. Liabilities is 30,12.9. So if it will remain to be positive, that is a goodwill. If it's a negative, it's a capital reserve. So meaning that 10,450 minus what? 11,599 minus 30,12.9. So this is 86.1. So meaning that if I take 10,450 minus answer, it will be 1863.9. So that is a positive and that is a goodwill. So goodwill you debit 1863.9. You credit business purchase account. $1863.9. You narrate and say what? To recognize goodwill on acquisition of Asara. Next. Is there anything to be recognized maybe in the other additional information? Or is there anything to clarify whatever we have done? So for this one, there's nothing. It's only the last question, the last sitting question, which was having some, maybe 2 or 3 additional items. External reconstruction is what was in the previous exam, which was done August 2022. And I have done already that question. So I will share. Before even we meet next time, you have to see what was supposed to be done. I have a recording of that. There are sitting questions. So we are done with the journal entries. Finally, now we do the statement of financial position. So now we are going to do the last part of that question, statement of financial position, as at 1st April 2016. So here, again, it's a very easy work to be done because if it's non-current assets, now we record according to Asara, that is according to Sawadi, sorry, according to Sawadi. So how Sawadi took those assets based on the additional information given. So additional information number 6 for the property, plant and equipment, it was taken over at what? Those videos are there, so they don't get expired. On my side, you realize that I use, some of the videos are private. So anyway, I will answer this. I will answer your questions when we are done with this. Let me finish this, and I will answer. So sorry for that interruption. That is what happens. So for the PPE, according to note 6, we have 94, 94, it was stated at 9486.8. So for available for sale, available for sale financial assets, that is 810. For that is we cannot record inventory here. So we have to record goodwill. So goodwill we have to record is this one. 1863.9. Remember that if it was negative, I said if the 1863 was negative, it could have been a capital reserve. Capital reserves you credit, you debit business purchase account. Capital reserve will appear under the equity part, not under non-current assets. So current assets. So for the current assets, we talk about inventory. So inventory according to note 6 is 608.7. We have receivables. Receivables is 477.1. Then we have financial asset at what? At fair value. So that is through profit and loss, or those informations we don't have to write. So we have total assets. We go to the equity part of it. So the ordinary share capital. So remember that when Sawadi was compensating Sarah, he gave out them ordinary shares. So meaning that when he was compensating that 10 for 50. So out of this, he gave out ordinary share capital of which value? So meaning that in your purchasers account, the ordinary share capital on the credit side is, it was 70.
52.
Then preference, he gave again preference share capital when he was compensating this of which value?
1600.
He gave out the debentures. He compensated of which value?
1768.
1760, meaning that that one goes to the non-current liabilities. Current liabilities, he took over the current assets at book value. So the book value of the bank overdrafts, the book value for bank overdraft from the statement of financial position. So we have bank overdrafts, we have the payables, and there was current something, current income tax. So the current income tax is 275.1, 1962. Then this one, 775.8 plus the 30. It was part of liquidation cost. You add the 30. So 775.8 plus 30. So this is 805.8. So total equity and liabilities. So the total asset, the value for total assets, 94.68 and 94.86.8 plus 810 plus 1863.9 plus 608.7 plus 477.1 plus 216.4. You are getting 13? 462.9. For equities and liabilities, 7052 plus 1600 plus 1768 plus 805.8 plus 1962 plus 275.1. It's just the same. So it's all about the concept of getting how you do external reconstruction, how you follow that process from purchase consideration. You move to the ledgers account, which are closed. You do the journal entries for the new company. Then finally, you do the statement of financial position for the new company. I think that is okay. And that marks the end of this question and the end of the session today, if there's no any question. So there was a student who was asking, do the videos get expired or we can get access until the end? You will get access until the end, until you do your exams. But even those videos, what we are doing here is enough. So maybe videos is when you go to revise. But if you are keen and you are taking notes based on what I'm doing here, you don't have even to want to watch, but you can watch again for the purpose maybe of remembering what we are doing in the coming days. So have a good night. If there's no another question needed to be answered, we meet tomorrow.
Good night, mwalimu.
Asante sana. Msome.